everyone. Welcome back to our Facebook financial planning webinar series. We took a little bit of time off toward the ends of 2025, but we're back for 2026 and ready to provide you with a ton of free educational content throughout the year to make sure that you have your financial plan in a good position and provide you with the education you need to make sure that you feel confident in what you're doing in your financial plan. So to dive into today's presentation, we're going to be talking all about 2026 and some of the things that you need to get started on now when you're looking at your financial plan as we start the new year, right? Hopefully we've wrapped up December and everything went well there and you made your retirement contributions. Maybe you still have some retirement contributions that you're doing to start 2026, since we can retroactively finish off those contributions that are 2025 contributions. But we'll talk about some of the different planning pieces that we need to be thinking about now at the beginning of the year and make sure we can capitalize on it to really set ourselves up for success as we go through this next year. So let me share my screen here and we'll get into the presentation. All right. So to kick us off, looking at the first quarter, one of the main parts of this presentation today is that you're at the beginning of the new year, and any changes that we make, it is a little bit easier because we have like a hard cutoff, right, for tax season and things like that for our tracking. It makes it a lot easier to just start planning in January, just the way we think mentally and how we track some of our systems and taxes and things of that nature. Also, we do have new contribution limits that came out for 2026. If you're on my email newsletter, I sent out the new contribution limits early or toward the end of last year that talks about what they're going to be for 2026 and how much you can contribute to your accounts. There were some sizable jumps up, especially looking at things like solo 401k contributions. So that's great to have more wiggle room to add more money into your accounts. Also, for court reporters, we have the irregular income that we need to plan around. We need to start thinking about tax planning, and for most of you being S-corps, you have to worry about corporate tax returns and personal tax returns. So there's a lot going on there. And also, I know a lot of reporters like to set new rates as they enter the new year and figure out how they're going to navigate that and get all organized for those changes in their financial plan. So number one that we want to focus on in the new year is going to be tax prep and tax planning. So we need to wrap up 2025, gather all the 1099s that you have. Oftentimes that I see people miss the 1099s from their bank accounts. So if you made more than $10 of interest in a bank account, you're going to get a 1099 from them and you're going to have to report the interest that you earned as taxes. So make sure that you're tracking all of those different 1099s that you're going to be getting out there and compile them for your accountant, and make sure that you get at least the first parts, but check to see if you get any revisions throughout the first few months of the year, as a lot of times investment firms will have secondary or even third revision 1099 forms that you'll need to update for your tax return. Also, like I mentioned, is a good time to make any switches in your financial plan right now, especially when it comes to using like QuickBooks or however you track your expenses and your income. If you are going to make a change there, now is a great time to do that. I personally use QuickBooks for myself, and I love it once you get it all set up. It's very easy and organized. So look at how you're going to be tracking your expenses for this year, and January is a great time to get that started. Also, don't forget, we still have one more quarterly tax payment. So make sure you're staying on top of that and get that done where you don't get hit with a huge tax bill by the time April rolls around. And as we think about 2026 planning, now we need to start thinking about, okay, how did the year end in 2025? Do we need to make changes to what we're contributing toward quarterly estimates? And do we need to set up a tax savings account to make it a little bit easier instead of just getting hit with a huge tax bill at the end of the year? Maybe it'd be a little bit better for you if you set aside a monthly amount instead of just waiting each quarter or waiting till the end of the year to pay your taxes. Also, what are the changes that you might be making in your retirement plan? Are you going to be switching from being a sole proprietor to an S-corp this year? What does that involve? So a lot of different things to think about right now. The biggest one that I wanted to focus on today was around your retirement accounts. The reason this was a big one is because you cannot contribute to multiple retirement accounts in a given year. So if you had a SEP IRA last year and you want to switch to a solo 401k, maybe your SEP IRA just automatically pulls money on the first of the month. So you already pulled money for January 1st to start saving into this plan. You need to take a excess contribution or excess distribution from that account to take the money out and be able to switch plans. You can't make a contribution to a SEP IRA for 2026 and then switch to a solo 401k and start contributing to that. You can only contribute to one plan. So now's the time that if you want to make a switch to retirement plan, you should do that. Keep in mind, it's pretty flexible, right? So you can do a SEP IRA this year and then switch to a solo 401k next year or vice versa, right? You can switch back and forth as many times as you want, and it's no issue. The only one you have to be careful about is a simple IRA. If you set up a simple IRA, you need to keep that plan for 2 years before you can switch to a different one. So that's the only one where if you're going to commit to it, make sure you're going to be happy with that choice for the next 2 years before you lock yourself into that plan. Otherwise, you can just switch from year to year on what plan you want to do. You just can't do contributions to both in the same year. Also, if you switched health insurance plans, maybe you switch to a high deductible plan for 2026. Now you can set up an HSA and start contributing to that. So look up companies you want to set up the HSA with. Most of the time, the way it works is that you just link your health insurance plan with the HSA company that you chose, and that'll help with the approval process of it. And you can just start contributing to the HSA. So you can go pick whichever HSA company you want to work with. Personally, for myself, I use the company Lively HSA, and they're very tech savvy and really easy to use. So I like them for my HSA. But that's something to look at. And again, new contribution limits. So see what you're able to do this year. And don't forget, that is a tax deduction off of your tax bill. So that is nice to make sure you maximize that if you can. Lastly, it's going to be setting up those automatic contributions. So I have some clients that I work with now where at the end of 2025, there was a little bit of a chaotic time where we had to figure out, okay, how much wiggle room do you have left to maximize your retirement plan? So we need to see what have we done so far this year? What can we do to max out? And then we're trying to figure out what we can do on the employer side based on how much they're going to pay themselves as a salary. Maybe they changed that throughout the year and it got a little bit confusing. So now's the time to get this all organized. The best way to do it is just set up a monthly amount to max out the plan evenly throughout the year. So for 2026, just looking at my cheat sheet here into a solo 401k on the employee side, you can do 24,500. So just take that, divide it by 12 and do that evenly throughout the year. And then you don't have to worry about trying to figure this all out at the end of the year and see how much wiggle room you have left. And same with contributions on the employer side. So see what you're going to be paying yourself as a salary, set up that number now, and then just do the employer contributions every month where we don't have to try and figure out what's going on and how much wiggle room you have left at the end of the year. Next is going to be looking at your cash flow. Look back at what happened in 2025. Did your business accounts just continue growing to a much higher rate than you've seen previously? Or are you down a little bit in your business accounts and you need to cut back on spending? Now's a great time to figure out what you should be paying yourself as a salary for 2025. The way I like to look at this is have your business checking account and pick a number that you want it to be. So maybe it's $50,000 you have sitting in your business checking account at all times. And then start to see what happens throughout the year. If your checking account in 2 months from now is at 70 grand, then you're clearly not paying yourself enough. And you can transfer more money toward your personal account to start using toward either your lifestyle or more importantly, toward saving and toward your financial plan. So figure out what the number is based on how you did last year that you want to pay yourself as a salary going forwards and be able to use that number to figure out how you're going to plan for your finances and your personal savings plan. The easiest way to track a personal savings plan is to pay yourself a consistent amount every single month, just like you're a normal W-2 employee. And that way you don't have to feel the ebbs and flows of your business and decide every month if you can save or not. You just know that you're getting this set amount from your business every month, and you use a portion of that to put toward your financial plan. Lastly, here is your investment portfolio. So now's a good time to look at what you've done in your investments. Maybe you want to rebalance and adjust your investment strategy. What rebalancing is maybe when you set up your portfolio initially, you had, say, 20% of your portfolio was supposed to be in the S&P 500. The S&P 500 did really well last year, so maybe it was 20%. But now it's gotten all the way to 30% of your portfolio because that area did really good and other areas of your portfolio did bad. Well, we don't want to necessarily stay off track like that. We want to get you back to what you originally planned for, of that 20% being S&P 500. So what rebalancing is, you would sell 10% of that S&P 500 holdings to get you back to 20, and then go buy those other holdings that didn't do as well for 2025. Just because they didn't do well last year doesn't mean they're not going to do well this year. So we want to get you back to that original strategy that you had planned for. Also, review that original strategy in and of itself and see if that's still the best plan for you. Maybe you're getting closer toward your goal. Maybe you had a plan to buy a home in 3 years. Now you're planning to buy a home in 2 years. And we don't want to be taking as much risk because you don't have as much time left until the goal. The market's just off of all-time highs right now. So now's a great time to reevaluate and consider taking some money and putting it on the sidelines if you're planning to use it in the near future. Lastly, this one's always important every year, is just verifying that your beneficiaries are accurate. Do you have the right beneficiaries for all your accounts still? Do you need to set up a trust? If you did set up a trust, did you actually make the trust owning the accounts and make the trust a beneficiary of certain accounts? Or did you just set up the trust and leave it, right? That's what I see happens a lot of time. You have to actually use the trust and put it in place and have the trust own the accounts is usually the best way to go about it. And have the trust own your house as well. So lastly, your action checklist to start today. For this week, I would first just list all your financial accounts in one place. It's always good just to see how things are going, right? If you do this once per year, you can see, okay, my net worth keeps going up and I'm making improvements in my financial plan. That's a nice way to just see what's going on and keep a running list of every year what your net worth is and list all your accounts every year. And so you can start to see the progress that you're making. Also, again, check what those 2026 contribution limits are for the retirement plan that you have set up for yourself. And if you want to contribute more than what the limits are, then look at alternative options. Usually the end-all be-all plan is the solo 401k, but you do have to pay some extra fees to have that type of plan. So see if it's going to make sense for you to pay those extra costs to get the maximum contribution limits possible. Lastly is set up one new automation, right? Even if it's like $50 a month that you're setting up that you weren't doing before, it all adds up, right? If we can just make small changes to improve your financial plan, it'll be big results later on. So look at your accounts and your savings plans that you have set up, and what's either an automation that you already have that you can increase, even if it's a slight increase, or what's a new one that you can get set up to just better your financial plan. Over the next month, not as much of a rush, but definitely important to start looking at. Make sure you get your taxes organized and get all those different 1099 forms and things like that you need to keep track of for filing your taxes for 2025. And if you were a bit messy in 2025, figure out how you're going to start tracking your finances in 2026. Look at retirement planning contributions, like I mentioned, and set up a new automation there, or even just adjust the contributions for what 2026 limits are. If you were maxing out last year and doing that automated, you need to up it because we have a little bit more wiggle room this year. Also, make sure you have that budget updated for 2026. Check the investment accounts that you have set up and make sure they're being rebalanced and they're still in alignment with what your financial plan is tracking towards, what the timeline is that you have available. And then lastly is make sure that your emergency fund is in a good spot. Most of the time with court reporters, I don't usually see that they don't have enough emergency fund. I actually see the opposite, where they have too much because they're not really sure what to do with their financial plan. And they've just built up this cash stockpile while they try and figure out what they should be doing. So make sure we don't run into that situation as well. Cash is good to have on hand for emergencies, but as interest rates go down, it becomes a worse and worse place to just have your money sitting there, not working for you. So if you have any questions on any of this stuff, if you're looking at your financial plan for 2026 and want to get things organized or figure out how you can really maximize what you're doing, feel free to reach out to me either in the comments of any of my videos, or you can reach out at traction-wealth.com and we can set up an introductory meeting to talk further. Other than that, I hope you have a great rest of your week and a good start to 2026. Make sure to come back to our webinar next week. We're going to have Perry Shields on talking about taxes. He is a CPA who specializes in helping court reporters. And we're going to have just a list of questions, and we'll be checking your questions as well throughout the live video to get those answered on any of your burning tax questions as we enter tax season. Have a great rest of your week, and I'll see you all next time.